In this video, we're going to discuss what is gamma. Now, this is the third major options Greek we need to be aware of before we're either purchasing or selling an option in a particular underlying. So on our past two videos for the options Greek, we discussed delta and theta. Those are the first two that we have to worry about. Those are the most important. Third most important is going to be gamma, and actually it carries more weight than what people think. So delta, we talked about how that measures the rate of change in the options price to a $1 move in the stock, all things being equal. And it's also how we get our probabilities of expiring in the money at expiration. Theta, we talked about how it measures the time decay of your options price with all things being equal within 1 day. So gamma, what this does is just as the delta measures the rate of change of the options price with a $1 move in the stock, well, what measures the delta? Well, that's going to be the gamma, right? So the gamma measures the rate of change of the delta of the option with a $1 move in the stock price. And it's also, there's a couple things we need to realize when we're talking about gamma. First is going to be as time passes and we get near expiration, gamma grows as well. So first things first, we have our February 25th expirations here. You can see all your gammas at the money right here. You're at 5, you're at 4. And if we go further out, even if we just go to February 28th, you can see we're all right down to the 2s and 3s, right? So all these are 3, here's 2s here. Second, we need to know, or we need to be aware of, is that when we are looking at our gamma, all of these options right here, right around at the money. So even if it's in the money or out of the money, just at the money deltas here, that's where all your gamma is going to be the highest. So it's going to be sort of like a bell curve. So you can see we got the 3s down here. We're kind of deep in the money. And then as we grow down here, we obviously get more and more gamma. And then as we go more further out of the money, then our gamma decreases. So that's going to be a common theme with these Greeks. Everything at the money is going to be where your juice is, because those options have the most volatility and the highest rate of change, right? Because these can go in the money or out of the money quicker, rather than something super deep in the money. Your delta is going to be high, your gamma is going to be low. The rate of change, everything in there is going to be slow. Same with the out of the money. Your delta is going to be low and your gamma is going to be low, because that's where your rate of the change is. It's not going to come as quick as here, because these have the highest probabilities of expiring either in or out of the money right here. So those are a few things that we need to be aware of when we're talking about gamma. And just to kind of confirm all of this, we're going to switch this gamma here. We're going to open up our delta. So first off, let's just be aware of where our gamma is on the 593 calls here. So this is pretty in the money, right? We're about $7 in the money here. It's a 3. And then we're going to compare the 600, right? So this is kind of at the money. The 600 call here, that's a gamma of 5. So if we compare that to our delta, you can see that our delta is 77 here. And then our delta all the way down here is 51%. Why? Because these right here have the highest probability of expiring in the money or out of the money, right? So these rate of change are going to be quicker. And also you'll notice that you have about a 5-cent differential here with your deltas between the 600 and the 599s. And as we get further and further closer and deeper in the money, you can see that it drastically goes down, right? Here's 4 cents, here's 3 cents, 3, 3, 3. Now there's 2. Well, it's because your deltas are growing exponentially. Your volume's decreasing, your delta is getting higher because you're deeper in the money. And that's the same how it's going to be out here, over here, out of the money, right? So you have your deltas here. They're all about 5 wide. Then you go down to 4, 4, 3, 2, here's 3, and then here's 1 right here with your deltas. That's just because you're getting further out of the money. Your volume is going to obviously decrease a little bit because of where we were here. It's really kind of about the same, but your volume is going to decrease just a little bit, and then your gamma is going to decrease as well. So gamma is actually pretty important to be aware of before we're actually purchasing or selling a option. So again, just to reiterate, just as delta measures the rate of change in a stock or an underlying, right? So it measures the rate of change of your options price in a $1 move, all things being equal in your underlying. So does gamma measure the rate of change with a $1 move price in your stock of your delta. All right, guys, if you like this video, make sure to check us out on all of our social media. We also have a Discord service if you are interested, and you can find all of our socials in the description below.